Capitec Bank is the 100-bagger since its listing at R2 in 2001, and it provides financial services to consumers through a network of over 400 branches. It's controlled by the PSG Group and has a market cap of R22 billion and a price-to-earnings ratio of 20. It has a stellar profit growth record and loan advances of around R17 billion. Capitec is a big debate point. Every time we have Rian Stassen in studio, we keep asking him whether we should change valuation models, because Capitec keeps blowing the lights out. Value managers say it's expensive, but it doesn't get any cheaper. It just keeps going higher. Daniel.
Yeah, I mean, they've got 3.7 million customers. That was at their last recording. And as I said, they added 877,000 new clients. So growing rapidly. And the question mark for me is, are they growing too fast? Are they lending out too much cash too quickly? Are they strict enough on their requirements on whether they lend out or not? I'm sure they are, and they would have to stick to the rules. And because going back to Basel III and the likes of the Reserve Bank looking to clamp down, according to Basel III, over a 6-year period, they're looking to implement where the South African Reserve Bank can actually really clamp down and say it's growing too rapidly, you're lending out too much cash too quickly, we need to increase your reserve requirements. So I wonder if that'll come into effect. They actually raised some money as well. At some stage last year, that was on the back of perhaps Basel III coming into effect. So now they've secured that scenario. It's too expensive for me, hey? PE of 20 relative to African Bank.
Paul, do you think they're embarking on any reckless lending at Capitec?
Not really. I mean, the culture there is quite conservative. Right from its roots, Michiel Leroux built the business because he was an ex-Boerland Bank guy, and he came in and joined the PSG Group, and they basically did it right. They dispensed with legacy systems. People, I think, get a little bit fixated with Capitec's offering as a transactional bank where you can have your salary and make payments and so on, but that's actually not where they make the money. They make the money from small loans. So it's a very similar model to African Bank, just smaller, 16 odd, 17 billions of extensions, credit advances relative to African banks, but have grown fast off a low base, doing well.
Do you own Capitec? You've admitted you own bucket loads of African banks.
Yes, just a few here and there for clients that are extremely persistent.
Why do you not like the Capitec story to the extent that you like the African bank story?
Well, just because of the scale issues, and also because the point you make is that it consistently looks expensive. Look, it's delivered growth of earnings which is unexpected or unprecedented in terms of being able to just go on growing into that PE. But it always looks as though the market has got it wrong. Remember, the market loves nothing more than secular growth stories in a mixed economy. So a company that appears to be able to deliver wow results every single 6-month reporting period, just after a while just starts running ahead on numbers, and sooner or later price for perfection.
Is that what's happening here, Daniel? You said you are cautious because it is growing too fast. You think they may be extending perhaps a little too hard into the South African economy. Is the story that we're going to see a pullback in the share price of Capitec down the line?
I think so many people were waiting for a pullback to buy, and it never ever pulled back. It's slightly pulled back off its highs, maybe 10 Rand from 240 to around the 230 level. But still, the run it's had has been immense, and they're looking to, as Paul said, the bulk of its earnings are from loans, but their transaction banking has also picked up quite nicely. That increased, I think, last year about 57%. They made about 860 million Rand from that division. So a lot more active in the actual banking space itself with regard to debits going off people's accounts, stop orders, transfers, etc. So they're looking to grow that space quite aggressively as well, and actually really literally compete against the big 4 banks like Standard and Absa and Nedbank, etc. So,
can you afford not to be in this story?
I don't know. It's just such a big question mark on the economy, and there is such a huge potential still for further lending, in South Africa and Africa. But, geez, I don't know. At these sort of levels, I wouldn't like to pay up. I think at current levels around 230 Rand is really fully priced. I'd be very nervous to buy up here, but then again, we were all saying that, and it's just continued to go higher. So
at 230 Rand, do you agree that it's
my
fully
old
priced?
rule of thumb is that if a share price is what it is, the company should be able to deliver 1/10 of that in earnings. So at 230, I'm looking for 23 Rands of earnings in a year, and at the moment they're running at around 10, 11, so they've got a long way to go. I just worry a little bit that all of the micro lenders in this sphere have given larger and larger loans to their historically well-behaved customers, and that means in Capitec's case, they're starting to look at vehicles and they're starting to look at homes. And you start talking about hundreds of thousands of rands then. So I think the only thing that would put the slip under Capitec's earnings would be if you had like a change of government in South Africa and the incoming crowd decided they wanted to reduce the public sector by a third. Then you would be in serious difficulty. But otherwise, things are going to be good.
Otherwise, things are going to be good. Daniel, hot or not?
They're opening a further 55 branches to their already existing 507 branches. Citigroup recently downgraded them from from neutral to underperform. One of the big directors sold recently last week. He sold about 50,000 shares. In the bigger picture, it's not a big deal. It's 11 million rand worth of stock. At current levels, PE of 20, I'd rather go with an African bank. Not hot, but I like the business. It's hot. The business is great, structure's great, management great, but not hot at current levels.
Hot or not?
Now, I'm afraid I come to the same conclusion. Not hot.